Rohit Nanda, Group CFO of Sona Comstar, is joining us now about a news trigger, which is that they have been given PLI to manufacture EV parts of two-wheelers. Rohit, help us understand how big is this opportunity for you? You are incurring capex also regarding it. How sizable can it become of your future revenue streams if I see, say, 2 year far out?
Sure. So look, one, it's, given how the scheme is structured, it's hard for one to quantify the benefits because while, the percentage of benefit that we'll end up getting is defined, it's a percentage on our revenue. But then since there is a budget for the government, finally what we end up getting would be also a function of how much is the aggregate industry claim on this scheme. So therefore, I would refrain from really quantifying it, but it will be sizable because let's say for this particular product that we are talking about, it's in a product segment which is already generating 5% of our revenue. So this is a product which is a hub wheel motor. We developed it in-house about 2 years ago. So we've actually been selling it for 2 years, and we would already be one of the largest Indian manufacturers for this particular product. And going forward, there is a decent traction in terms of the product and also the fact that electrification in the two-wheelers is also gaining pace. So 5 years is the duration of the scheme. So we expect it should be a sizable benefit. But we are looking at it more from the standpoint that it enhances our competitiveness rather than merely looking at it from, let's say, adding to the profit.
Mr. Nanda, there is a part of the street which is a bit worried about the margins of this particular product of yours. Right now, it's 5% of the business, but given it's expected to scale up, do you think it could be margin dilutive at the aggregate level? Or do you think the incentives that you'll get from the government will probably make up for it? What do you think will be the impact on the profitability, accretive or dilutive?
So look, scheme would eventually be accretive only. The thing is that the benefits from the scheme will enhance our competitiveness, which means that this should help us win more business. So on the whole, it is only going to be accretive to the profitability of the company.
Accretive overall margin level for the company in terms of the EBITDA margins?
Yes. So when we talk about the margins, we generally give a range. So historically, our margins have ranged between 25 to 28%. So given the product profile and the order book, we expect the margins to stay within that 25 to 28% range in the foreseeable future.
You wouldn't be able to tell us right now as to how much of capex would you have to deploy, or if you would have to, raise fresh funds to be able to cater to the two-wheeler EV demand?
So look, like I said before, this is a product which we started making more than 2 years ago. So the capex outlay is already there. It's part of our existing capex plan. So some bit of capex we've already done in the last 2.5 years. And going forward also, that capex is there, which is already part of. So there is no specific capex, I would say, which we have to do over and above our original plans. So it's not a new product that I'll start making, going forward or something. It's a product which I've been doing for 2 years. We had developed it in-house. Similarly, even other products also, if you see. If you look at our order book, it's 24,000 crores of order book, of which 80% comes from electric vehicle segment. So all of this is part of our electrification drive, wherein, we started making EV-focused products way back in 2016. So this, in a way, is playing out, our overall strategy of increasing using EV as a growth driver for us.
You have a 24,000 crore order book right now, and I was looking at what the street is estimating your top line next 2 years. Around 5,000 crore is what I'm seeing it right now. And you are adding capacity across your product line. Do you have good visibility of, say, 3 to 5 year period of a 20-25% kind of a top line growth because of initiatives such as this and other product line addition which you are doing across capex?
So look, the order book of 24,000 crores gives us, I would say, decent visibility for the next 3 years or so, because most of these large programs will come into production over the next 3 years. So I would say this gives us decent visibility for the next 3 years. We don't give revenue guidance, but I would maybe like to point out that, historically we've grown at a CAGR of above 25%. So given the order book, I think it should be possible to maintain our growth trajectory.
Quickly, before we let you go, this is one of the products that you've got the PLI approval for. Any more in the pipeline? I understand differential assembly for EVs and other things are also in the pipeline, perhaps?
So we have already put in 7 product applications. So this is the first one to be approved. Rest of them are being assessed. There would be another 3 to 4 more product applications, which we will be submitting very soon. So as you may know, there is a process of evaluation of the product as well as the domestic value addition, which are the key conditions in the scheme. So we'll have to go through that process, but we are fairly confident that we should be able to get all the approvals.
That's great, Rohit. We'll chat when you get those balanced 3 to 4 approvals that you're awaiting. But good speaking with you. Thanks so much for taking the time out.
Thank you.